Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for Monday, the 5th of December, 2022. And I'll tell you, I'm worn out. We have a big sale, as you know, going on in our Cyber Week sale. And I must tell you, it ends tonight, Central Time, midnight. So that is Monday night, Central Time, at 12 o'clock. The computers will turn off. This won't work anymore. Remember, we've got all of our courses. You can pick from any of the three. I've been beating myself up finishing the Outside Day course. I worked on it all day today. I'm on the very last chapter. Not happy with it, so still fixing it. I should have it done tomorrow. Then it goes to the computer people. It's rendered, but they got to do certain things for the website, and then it's all done. So sometime this week, that'll be there. Remember, all of our courses are going up by approximately 33% at 12:01 a.m. Central Time. So this is your last chance to get any of these at that price, at that retail price. That's how that's going to work. And as I said, they're free with any one-year subscription to my market research. Just simply click up here and you won't be hearing these ads anymore. This is the last one of these for this year. So bye-bye ad. All right. Let's talk about the markets. You know, for my full research people, I wrote a very detailed report over the weekend. And what I said, in essence, is that I'm wondering if the Fed's not going to go 75 basis points on December 14th. And the reason I'm saying is it's an easy move for them. Why? Jobs data was too strong. And I'm watching today's data that's coming out on these different sectors, the service sector and so on. It's still too strong. So they've been doing that. Why not do another one? And you can always back off very easy after that. I seem to be in that camp, at least when I wrote it, by myself. But I think more people are going to start talking about that. And I don't see anything wrong with it. That thinking for the change got the dollar to bounce today against a number of currencies. We've been down in a lot of the metal markets today. You pulled back. But remember, China's easing. So is China's now starting to ease their COVID restrictions, and supposedly on Wednesday, they're going to release another 10 rules that eases again. I think this all comes home to play, and I think it's friendly in the metal markets. You know, you have to get to the point where the Fed's comfortable and they don't have to go crazy with interest rates, but what's to stop them from a 75-point hike and just say, hey, folks, we didn't get the results we want. Let's go here and we'll take a look in February and see what the lag effect is. Do you honestly think that'll break the back of the market? I don't. Is it an easy move rather than go 50 and then back up to 75? It's beyond easy. You can get away with that completely. So that's what I think. As for the energy markets, I have no idea what these caps are going to do one way or the other. Nor does OPEC. Over the weekend, OPEC decided to do absolutely nothing. They said, let's just sit and see the impact of all this. It's too hard to figure out between China easing, between Russia saying they're not going to sell to any signers on, which is the whole G7 community, and the Eurozone. What does it mean? As last I'm looking, most of the G7 after today is not buying anyways. And you're going to see Europe's probably not going to buy, and then they're not going to buy distillates and other products from Russia. I think it comes on the 15th or so. So everything's right around the corner. And what's Russia doing? What we talked about. They're playing the old game from World War II. They picked up the playbook and they said, we can beat these people in the winter by using what? By making the winter our ally. So they're bombing, they're sending missiles, they're sending everything, and they're crybabies. They get hit inside of Russia at some air bases. Look, we're being hit by drones. I didn't even know that Ukraine had drones that can go that far, but maybe they do. Whatever the case is, it's called war. And Russia's proven that there are no rules within this. So I'd love for one thing to happen in Crimea, take out that bridge again. Really stick it to Putin. That would be something. Okay, so we take a look at the S&P 500 index. Maybe we take a look and can we get a break back to the support? It's possible. When I look at the chart, you're pretty much sideways. The market's had a nice rally here. What would take the oomph out of the market is getting underneath this break low right back here. And that low, we can get there so that you can see it nice and clear. Here we go. A couple more days. Let's get that. There we go. Okay, so we don't want to get under 39.4150. If you get under that number, you do break the pattern of higher lows, higher highs. Is it the end of the market? Well, not necessarily, because you're down to key support in there of the 18 and then the 100-day average of closes. And look at how the 100-day average moved to be the support number in this market. So that's what it's there. Where's the resistance? If you can't see the 200-day has been acting as it, get your eyes fixed. It's right there staring you in the face. And now what's happening is the Bollinger Bands are wrapping their arms around the market and going to take some of this volatility out. That's what happens when you see the Bollinger Bands wrap. Volatility comes out. Now, you wouldn't know that looking at these ranges, but it's typical as to what happens. Let's see if I'm right on that. And the market dies a little bit here. Momentum-wise, you lost the embedded reading. You should have gone back to the 18-day average. Enhanced Bollinger Band course. You tell me what that market did. It's exactly what it did. So now we get over to the NASDAQ that just was overbought, went up again to the 100-day average. So I have a gentleman that, and I love when people write it, I mean this on a very positive note. He said, I don't think the 100-day average has been important. And I wrote back to him on the YouTube part, I said, I don't think you're looking at enough charts. Because whatever he's focusing on, you don't think the 100-day average, the green line, has been the resistance there? Then he'll say, well, that's that one. I'm telling you, I look at 100 charts every day. I look at so many different things. You lost the embedded reading here. So when you lose an embedded reading, let's get to it. And so you can see, here you are embedded, and you lose it. You're supposed to go to the 18-day average of closes, 38.83. And I know you're going to say, well, it's 38.74. It's already there. And I'm agreeing. It did it all in one day. But that can happen. There's nothing wrong with that happening. But look where the market's trying to gather some support. Doesn't mean it will. But here, too, the arms of the Bollinger Bands are starting to wrap themselves around the market. Same in the Russell. In the Russell, you've been caught between the 100-day, the 200-day, and the 18. You do see that. It's just back and forth right in there. There's a time and place to be out of the indices. A number of these indices have said recently, stand back. Then we'll get the argument, what about the Santa Claus rally? Well, when is it? Okay, I've read reports where it's the week before Christmas, and then I've read the reports, and I've watched them, where it's literally from Christmas into the first week of January. So you've got a window of opportunity there if it shows up. I'm still of the opinion it will, but why should it do anything right now when we have the FOMC meeting next week? And we're getting all these reports that you got to be going like I am. Why can't the Fed go for a higher number? Is that friendly? It shouldn't be initially. Then the VIX cash. You still have an embedded reading. So yes, while the VIX is rallying, until it loses with the red number over 21, it's a bear market rally so far. The pros are waiting a bit higher probably to get short. I wish it would have hit the lower Bollinger Band, because so often you'll hit that and make a run to the 18-day average of closes. I can show you on the chart over and over when it happens. It doesn't happen often on these breaks because you're back down to the 18 level. You're no longer pushing up here near 30s. You've come down an awful lot in that number. Now we get to the bonds and notes. You're still embedded, which is bullish. Stiff resistance at the combination of the Bollinger Band and the 100-day average, right through here together. I wouldn't be pressing that in any manner whatsoever. And then the bigger question is everybody right by saying, hey, we're going to get a recession in 2023 and blah, blah is going to happen? Let me tell you what I know. It's too easy to make that prediction. I'm not in the camp that has to agree that we're going to be in a recession or no recession. I've learned, as you already know probably, it's wonderful to make these crazy projections and you know what the whole year of 2023 is going to be. I have trouble knowing what tomorrow might offer, and now you're looking a year down the road. It's nice to talk about it. It's a wonderful academic exercise. Don't bet on it. That'd be my best thing. If everybody's right, well, then interest rates should continue to fall and this should continue to rally. But I'm starting to get big resistance numbers showing up on this. Same thing in the 10-year note. Maybe you've run your course here. You got up 3 days ago into that key resistance, and now you're starting to come back. You lost the embedded reading. What happens when you lose an embedded reading? Often it's lost before the market makes a new high, but it goes back to the 18-day average of closes. We'll see if that works. In the dollar, I teach that the first challenge of a 200-day average, I walk away. Why? It's a big number. On a daily chart, it's a 1-year average. That's support, and I think that's what the market's telling you. It's not a buy signal. It's a signal to not be short. There's a huge difference between the two. Do I see a trend? I don't. I mean, on a daily chart, you have a higher high, lower low. We're not blind. We see the market has broken down, but now you're into the support area and you're not embedding. I'll let somebody else want to hold the shorts. The flip-flop would be true for me in the euro. You get up for the first challenge of the 200-day average, you own it. I don't want to own it above that now. Give it some time. It could set back and maybe we get another opportunity to get long at a better number. The trend is certainly up, but I think it's rich. In the British pound, if you lose the embedded reading, which you're flirting with doing tonight, if it stays lost, then odds favor you're going to come back here to the 18-day average of closes. But where's the battle? The battle's between the 200-day average and the upper Bollinger Band. I want no part of that battle. I'm going to stick with what I teach. The first challenge of that 200-day average is generally a great spot to come out of a market, long or short. In Bitcoin, tell me the volatility didn't disappear. And I wrote that, and I told that to people this morning. I said, you know, the worst of this market's happening. The word is happening. There's a legal case about to go on. You know, a lot of these crypto exchanges will pay you interest on your currency, but they lend it out. Have you ever read the fine print? It appears that there's a case that says, once you sign these documents, you've in essence given up the right to your Bitcoin. Are you aware of that? It's a legal case. I think it's it's either Reuters or Bloomberg. Read the article tonight. A judge is going to rule on it. I don't know enough about the case to tell you anything other than what I heard, but every bad shoe that can drop on these cryptos is happening. And it wouldn't surprise me that there's something in there that goes against investors. Just wouldn't. Do I know? I don't know. First of all, I've never owned a crypto in my life. Don't want to own cryptos. I'll let you guys own that. In Brent versus WTI, you continue with the differential coming down. And as I said, I have a hard time understanding what all these caps mean. Does it mean the market falls apart? Does it mean the market supports itself? We're right now sitting here pulling back into this big area in a downtrend. Support doesn't come into 81, so I go to WTI. Now, let me think here. Didn't the Biden administration say from 72 to 67, about a month and a half ago, was a window that they might step in and start replenishing the strategic reserves that they've been using? Maybe we should get a test of that range. Let's see what they're really doing. And I mean that on a positive. If we can find a floor in the market, that changes things. Now, we haven't tested it yet. You've been into about the 74 range, but we could easily get down there. On the heating oil, keep dropping, baby. We need this. You know, our cost for heating oil in the wintertime is going to be large. Now, thank God the weather has been mild in the United States, and it has been mild. I mean, it's December 5th. I was outside today without a jacket in Chicago. That is really unusual. Natural gas, you're seeing the impact of that just falling apart. You're not getting that cold blast of weather. And we do sometimes get it in early December, and other times it can be mild. People don't realize living in the Midwest that not every winter is a severe winter. You know, you would think so. You think, Chicago, the windy city. Windy's about politics, not the wind off the lake. So that's what it is here. But we'll see. Maybe this is going to be the new area with climate change where I can get a palm tree. Who the heck knows? In any case, you can see you're down to a support zone. If you were sitting next to me, you'd get the jab of the right here into your rib cage. cover your shorts. First challenge of the Bollinger Band, cover your shorts. And that's the whole purpose of why I've done the year-end sale, to help you choose your courses, do what you want. Just move your cursor at any point to the top of these videos, and you will see the icon come up. Give it a click. You can buy. You got probably another 5 hours, and it's over, baby. I'm Ira Epstein. You have a great day. Thanks for listening to my nonsense, and I'll see you tomorrow.